I would like to welcome everybody back to the Trader's Mindset series. Very thankful for the comments that I've been getting and how much this series has really been helping everybody out there. Super glad that it's helping everybody. That was the whole purpose of putting out this series, guys. On the first video of the series, if none of you have been following along, first video was on discipline. And we were going over how discipline was super key to consistency and continuing on through your trading career, because you want to make sure that you're always here for the long term, and discipline is going to help you with that. If you did not see that video, there will be a link in the top corner. Go watch that one. The second video in the mindset series was patience. And patience is another key factor to your trading journey. You have to have patience to wait for your trade setup and wait for your trade entry. So it goes hand in hand with discipline. Patience and discipline basically go hand in hand together. You have to have both in order to be a consistent trader. If you didn't watch that video, the link is in the top corner. Go and catch that one. And today we are going to go over bankroll management. And for any of you out there that don't understand what bankroll management is just another form of risk management. I know a lot of you are going to say, well, I use R to R. And for those that don't know what R to R is, risk to reward ratios in order to trade. And for you guys, if that is working for you, absolutely stick with that. With my trading style, how my entries and exits work, risk to reward just doesn't make sense. I believe that risk to reward is very linear. Basically, it's a good option for beginner traders. So essentially, you aren't sure that you have a strategy that has a very high win rate. Essentially, what you're doing, right, is you are saying, okay, well, you can lose X amount of trades and still win. So say that your risk to reward is 1 risk to 3 reward. How they present this is if you were to lose 3 trades, you only have to win 1 to break even. And my argument with this is, everybody can look at it how they want. My argument with this is how they present it is you flip a quarter, that's a 50-50 win rate. So if you flipped a quarter, you risk $100 to make $300. Then each time you flip the coin, it's a 50-50 win rate. It's going to be heads, it's going to be tails. So you say heads, I go long, tails, I go short. And here's how they present it. Your stop loss is $100. Your take profit is $300. And essentially, you don't have to be right because your order is 50-50. This is how they present it. They love to say, so here's how risk to reward works. However, saying that anything is 50-50 to go further doesn't make any sense to me, and it never has, right? So if you're going to lose 100 or you're going to make 300, you have to ask yourself, is it more probable the market moves $300 up, saying that you are in a long position at this point, or $100 down? Out of nowhere. We're not talking about any kind of market structure. We're not talking about any Fibonacci level or order block or fair value gap. We're taking all this out of the equation. All we're saying is you flip a quarter right now. Top loss is $100. Your take profit is $300. So that means that you have to move 3 times as much in one direction than you do in the other. Any of you guys that understand the market understand that that in itself isn't 50-50 anymore. There's not a 50% chance of moving up more than you move down. You've already messed with your equation as we go through this. And this is what they like to preach to you is, okay, this is how it works. If you have 3-to-1, that keeps you going. I am not a R to R trader. My trades are based on the actual loss. To me, that's risk management. I call it bankroll management because my trading system is loosely based on sports betting, playing poker, because I did both those things before I ever got into the trading scene. We can talk about that one day. It's too much to go in detail on this video. We can discuss that if somebody's interested in how I actually got into trading. How bankroll management works is you have X amount of bankroll. In order to continue on, what you need to do is risk a percentage of that bankroll in order to keep yourself going. Because if you run out of capital, obviously there's no way to continue on anymore. So you have to protect your bankroll. The best way to protect your bankroll is make sure that during the times of loss, which can very well happen, you're not losing everything all the way through, right? So that's what bankroll management is. You have to ask yourself, what can you control in the market? And I don't believe that you can control much more than your risk. You can go on to say, well, how do you know then where to take profits? For me, because I'm looking for stop losses, it works a little bit different. And here, let's give an example. Let's do that. So here is an example of my trading style. I use 2 mini contracts when I enter. Essentially, this candle closed with a top wick. So what does this mean to me? And we'll go over this real quick. And again, this video is on bankroll management. It's risk management. This isn't trying to show my trading strategy. There's other videos out there to watch that, right? But I'll just give you my thoughts as we're looking at this. So essentially, here's the range that you're in. You break out a range and you close above. Well, what happens here? Breakout traders have went long. So this pushes price up. What happens next? Short traders came in, started trading this back down, correct? So where are their stop losses? Right above these highs. Their stops are sitting above these highs. There could be order blocks here. There could be supply here. There could be whatever. We have nothing to the left. I'm just showing this as representation of how I manage my risk, right? So short traders are coming in. Breakout traders are here. Stops below the lows. Short traders are here. Stops above the highs. What am I looking for? I'm looking for a bottom wick on this candle, which is why this candle opens up, starts driving down. This can be a 30-minute. This can be an hour. These are the time frames that I trade. So now this candle comes up and flips. That's my entry. When this candle flips bullish. So we have a bullish candle now with a bottom wick. Obviously, this got to be green as well. So this wick is green. Candle flips. Our entry's right here. For me, what has happened here? Breakout traders came in long. Shorts came in against it. Breakout trader stops are below. We come down, hit the stops. All breakout traders that are break, retest, continuation traders. The retest came. They put their stops close underneath the range. They got stopped out. So what do we have now? Now we have the short traders stop losses up here. I'm trading into these positions. We come up here, we retest the highs. A lot of people say, okay, well, this is a double top. What we're doing is we're retesting these highs in order to test these positions that came in here. Do we have to run the stops? No. That's why TP1 goes here. This is take profit 1 for me. The stop loss will then go 1 tick into profit. So I'm out on 1 contract, 2nd contract, stop loss, 1 tick into profit. If this price runs, I will chase my stop loss with the price. This is not a take profit 2. I draw all of them up with a P&L just so you get a representation of where we're going. If this goes all the way up here and you get a quick candle up, then so be it. I'm going to chase that with a stop the whole way, not give anything back that I don't have to. And you can see that with the price. When the price starts failing, when traders start coming in, and we'll go into managing trades in another video, we're talking about bankroll management. So R to R is what? You see what I'm saying? Our stop loss is the only thing we can control. How much of a stop loss will you take? That is completely up to you. I don't take a stop over 30 ticks. 30 ticks with 2 minis is a $600 stop loss. It's not going to be the same for everybody. Your positioning size could be different. That is the rules of my entry, just like we talked about in the discipline video. Something else that some people do is manage into a trade. So as the trade goes against them, they will add contracts away. And there's a lot of successful traders that do this. I do not do it, and I'll give you my reasoning in just 1 second, but let's go over how they do it. What they'll do is, let's say they're going to use 1% of their account. They average in at 0.25% for each move against them. Now they've got that whole 1% entry by the time it's all said and done, and they've gotten a better entry on the way down. For me, I don't do that. My discipline is you have to have the setup, you have to have the entry. Everyone knows this. To, go against that and say, okay, there's my setup. I'm going to enter a bunch of times on the way down, goes against my discipline. It'd be like if you were on a strict diet and you say, okay, well, every day we're going to have a piece of chocolate cake. That's going against my discipline. If I'm going to be on a strict diet, I'm going to be on a strict diet. I'm not going to have a piece of chocolate cake or have cheat meals or whatever the case may be. For me, trading, I'm going to be patient. I'm going to be disciplined. I get my setup and my entry. If those don't present themselves, I don't take the trade. So we run up here. Let's just say candle runs to here just for fun, right? Now our entry was here. Candle runs to here. Well, that's 90 ticks, 94 ticks. Your risk to reward is over 3 times. This could be a quick pop. It could run for who knows how long. Basically, what I'll do is chase it. So some moves may run for a long time. Some moves may run for a short time. And think about what risk to reward is when you're really going over this whole thing, right? All you're saying is that your risk that you put on for one trade was less than what you plan to profit for one trade. I don't understand this trade by trade basis that everybody wants to think that's how it works. At the end of the day, we are trading for the long term. You want to know, what did you make in 100 trades? What was your profit? What did you lose in that 100 trades? That's the number that matters. It doesn't matter if you did 3 times risk to reward on the last trade or 5 times risk to reward on the last trade. What did you make? What did you lose? And if you would start, looking at it that way over the last 6 months, over the last 100 trades, and start thinking, how much money did I make? How much money did I lose? Start putting that in perspective rather than saying, for this trade, losses happen. And the loss doesn't matter. The last trade doesn't matter. It matters what you've done over the last 6 months. It matters what you've done over the last 100 trades. You guys really need to start thinking of it that way rather than basing everything that you do on one trade. The longevity of this game is not one trade. Make sure that you guys understand that, right? By managing your bankroll rather than just managing RR in one trade, it's going to protect you from emotional decision making and large drawdowns. It's the key to staying in the game. The most important aspect of bankroll management is setting risk percentages. Basically, what you want to do is find a percentage that works perfectly for you. Most people are going to do 1 to 2%, somewhere around there. If you use 1 to 2%, you're going to see that you're not risking so much that this trade's going to end you. You're only risking 1 to 2%. And that's where the big difference comes in at. A lot of people want to do RR. The risk isn't even a huge consideration of what we're doing. It's just the trades 3R. You hear this all the time. Oh, well, I made 3R today. I made 10R today. Can somebody please tell me what 3R is? I would love to know. Down in the comments, let me know. What is the dollar value of 3R? Because you understand what I'm saying? Making 3R, making 10R, what is the dollar value? Making 1% of your account, making 2% of your account, making 5% of your account. This matters in the long run. You want to make sure that by reducing the percentage that you risk on each trade, it's going to limit the exposure and ensure that even if you have a large string of losses, it's not going to, substantially hurt your capital. You can continue on. You can live to fight another day. You want to make sure that you're never overexposed in the market. And that's the biggest rule, is that if you overexpose yourself, you're going to take losses that create emotional trading. The biggest reason that people revenge trade is because they've taken losses that they just can't handle emotionally. You have to keep your losses manageable. You have to have small losses that are not going to affect you emotionally. And that's why a risk percentage is such a key aspect of that. And emotional trading will also lead to you increasing your position size. After a loss, you want to recover it quickly. So what do? Well, you double up on the size that you traded the last trade. You can't do that. That's where your discipline and patience comes in. When we talk about discipline, patience on the last two videos, and how that keeps you consistent, risk management is the other side of it. You have to have proper risk management. And if you use bankroll management like I do, it prevents emotional trading by keeping you focused on a long-term goal, keeping you focused on long-term consistency, not focused on short-term results. That's why I say don't look at it one trade at a time. One trade, if you looked at everything by one trade, you'll get super emotional that way. Same thing goes for winning trades. If you get on a winning streak, it's still essential to stick to your rules and avoid getting overly aggressive with your capital. If you start upsizing just because you're winning, you can be in the same boat because you're overconfident, you think you can't lose, you start risking more, and then you start taking losses, and then emotion sets in. You try to revenge trade to get all those losses back. The whole point of using bankroll management is so that your losses will never be catastrophic. It's only going to be a small percentage that you lose on each trade. That keeps you consistent. By risking only a small portion of your capital on each trade, you can sustain multiple losses without being knocked out of the game. You can continue on. Bankroll management, in my opinion, is the best to use because you're controlling the percentage of capital that you risk on each trade. You ensure that no single trade or series of trades can wipe you out. Like I said on previous videos, trading is a marathon, not a sprint. And bankroll management keeps you in the race for the long term. And the reason that I stress proper bankroll management is because over-risking is a huge issue with most traders. Most of the time, you want to make money so fast that you have to risk and up your size to accommodate you making all this money that you're trying to focus on making. And you have to remember that if you can consistently make $1, that you can consistently make $100. All you have to do is compound. If you can consistently make $100, you can consistently make $1,000. It's easy. All you have to do is compound. So many of you guys are so focused on the fact that you need to make $1 million right now that you never stop to consider the fact you have to build yourself consistently there. You have to have a bankroll that you can risk 1 to 2% and make $1 million. It doesn't happen overnight. You have to build your bankroll. This is a marathon, not a sprint. Here's the quote for today, guys. Money moves from those who do not manage it to those who do. And just think about that. That's Dave Ramsey. That is absolutely the truth. Hopefully that makes sense. Any of you have any questions? Don't hesitate to ask. If any of you don't agree, let me know in the comments. In the next episode, we're going to go over building confidence. And this is another key aspect to creating consistency and being the best trader you can be. And this is another key element of being a consistent trader and having a winning trader's mindset. And this is what this series is all about. If you guys like the video, give it a thumbs up. If you want to see the videos coming in the future, be sure to subscribe, hit that notification bell so you'll be notified when the next video comes out. Have a wonderful day, guys. And as always, stay consistent out there.